Good afternoon and welcome to today's investor webinar for European Resources.
Thank you.
On the line today we have Managing Director of European Resources, Mr. Jason Beckton.
Thank you, Anthony. We're going to talk principally about our asset in Finland, but of course Slovakia as well. And my job as a speculative geologist is to talk about some comments about the future. So there's some disclaimers here, of course, and seek your own investment advice. We go to the next slide. The key thing is concentrating ownership. We have 100% of all of the assets the company is working on at the moment. We have basically two competing rare earth assets, one of them with its nose or its body length in front in coarseness versus Yoki Kangas. And then we have a series of gold and silver assets with some copper as well in Slovakia, all of which are planned and ready to go. We're just waiting on some permits from the government there. We were going to talk about, to open the presentation, a little bit about the Europe thematic with respect to rare earths and some recent developments there that are underpinning the industry. And we're going to talk about where shareholders' assets are primarily based in Finland, because we believe in speculating is fine, but not with jurisdiction. Next slide, please, Anthony. So one of the sadnesses is our current market cap, but we believe the assets' continued growth will improve this situation. I don't comment about the market up or down, and the main point is we are available both here in Australia and in Europe on the Frankfurt Stock Exchange. That code's being updated at the moment to ERE3 in Frankfurt, and we should, as of course we're listed there to increase demand in the stock. That's part of the job. And we believe that shareholders at the current price, whether they're holding or buying, are in for a positive future. The stock's held by management largely, as you can see, top 20 shareholders, 42% standard junior register profile. If we go to the next slide. The team in Australia, in terms of corporate management, has a long history, over 40 years, of developing assets all the way to production. In the United States in the past with Peter and Tom Mann and I, in Mexico as well with Bolnisi, and also in Europe itself in the former Soviet Union in Georgia. We also have experienced technical directors in John Levings and Stephen Gemmell, geometallurgist and planning engineer or engineer, legal engineer, I guess, Stephen, more so. And we also have the capable and lucky to have Richard Edwards, who administers much larger companies such as NIC and A4N, also part of the Ms Corp group in Sydney. We have a capable Euro team, if you like, a mix of Slovaks and Finns who can cross-work in whichever project we're working on at the moment. That's mainly coarseness, where the Slovaks have been working recently, including Marian Urban and Jakob Bukovina, who carry out the bulk of the field work. And then there's Pekka Pessinen administering things. Tapani Hoslo, who helped us pick up our new expansion to the South Poikil, which we'll talk about. And Antti Kailainen, who I've known close to 20 years. And Joran Osberg, who does an excellent job on the west coast of Finland, managing the asset. If we can go to the next slide. Of course, every jurisdiction talks about rare earths and critical minerals, which we tend to avoid. The main thing we talk about to our shareholders is that we are filling a supply gap. We have almost minimal, we have some competitors in Europe at different stages or in different jurisdictions that are arguably not as commercial, such as Greenland and Sweden. We have certainly progressed the asset to where we are, mainly because of where we are and the permitting and how quick it is. So there certainly is tangible proof of government support. Every jurisdiction says they have support, or company in a jurisdiction, but we get things approved in weeks, where it's months elsewhere where I work. And of course, we have high-level support in Brussels, which is interesting and helpful. And financially, it has been helpful as well. We're part of a REM hub, Click Innovation administered grant process where we've used funds to advance the asset on the metallurgy side, tailings dam. Next slide, please, Anthony. So talking about the commodity, which is a basket of commodities, if you like, from top to bottom, bypassing the top two, which are usually very low price, and go to tails. The next two, praseodymium and neodymium, or next five actually, praseodymium, neodymium, samarium, europium, and gadolinium, or ND and SEG as it's now called in the industry, are all increasing in value almost weekly, underwritten by programs both between the United States and an entity in government and a company in the United States called MP Materials. And more relevantly, I guess, the Australian market, Lynas, and the Sojitz, the Japanese, with respect to its mine at Mount Well. Both agreements are underwritten price of $110 a kilo for PRND. And there's vagaries in that, but basically that's about $30 above what you really need to run these mines. You need the price at NdPr at about $80 a kilo to be for a hard rock mine to work pretty well. And that's basically established technology. What we like about these minerals is that they're increasing in value, of course, but the technology is being innovated on, but is largely, if you like, a successful process route for these 5 elements. And then there's the additional 2 elements, which are like icing on the cake, as it were, which is terbium and dysprosium, so it's basically the next 6 and 7 on that list. And they're very high value, as you can see, and they're in appreciable levels. Terbium 10 ppm in the resource is significant for hard rock. And we think that of those, the most topical at the moment is samarium, which has gone up 5-fold since January. And any commodity that increases 500% in 5 months, the market starts, heads turn and people start to wonder what is going on. And really the demand is there, but supply is basically non-existent. So recently Lynas in Malaysia, for example, produced samarium, and they didn't do that for fun. They did it responding to a crisis, not critical is the word used too much, but an actual crisis in the fact that it doesn't exist, samarium, outside of Russia and China, and they need it for nose cones for F-35 fighters. So with the new samarium cobalt magnet. So anyway, I know I'm dwelling on price here a lot, but shareholders are in a good spot here in that we have appreciable levels, which are not yet commercial because we don't have a reserve, but they're in the resource. They're very important to keep tabs on. We go next slide, please, Anthony. So yeah, that's pricing in terms of where the assets are based. I'm also a big believer in you can have your own opinion, but not your own mathematics. And the fact is we are in the lowest electricity cost environment in the Western world. There's low and high spikes in other jurisdictions such as Brazil, but the average is 18 cents a kilowatt hour. We're just a bit under half that at 7 cents a kilowatt hour. Then the other nominal competitors in Australia at 33 cents a kilowatt hour, so 6 times the average price of electricity in Finland. So where would you build your factory or your plant? And California as well, where they successfully produce right now from Mountain Pass. So to produce minerals, you need to crush them, which is always the biggest cost. And we think that this puts us in a good place for a future scoping study, which we're working on shortly. And of course, usual first world standards of people and environmental standards or permitting. And I hasten to add that these are unusually fast process, even, sampling old tailings dams, things like that, that all happen within 5 weeks of 0 to trees cleared and drilled out and samples on the way to the lab. So, I've never worked in 30 years in the industry, a more go-ahead supportive jurisdiction in terms of permitting. Next slide. Thank you, Anthony. So, the jurisdiction, a little bit more detail. Importantly, it's EU, close EEC, of course, close to Estonia, where there is a processing facility that actually makes magnets and receives a mixed rare earth concentrate from its other suppliers, of which there's reduced drastically recently because they are mainly Russian. There's also the fact that Corsness was a brownfields project. It was a lead mine. This is a key. This is where therein lies the opportunity. This was in the late 60s and early 70s mined successfully, a small lead button or pulse, if you like, which is hanging off the side of one of the 7 rare earth structures. And that's why we'll talk about what the difference is between our resource statements and the previous production, which was under 1 million tonnes. And now we've got resource of 15 million tonnes. So we're 15 times already in tonnage what was produced in the past from the lead mine. And with the exploration target on top of that, arguably we're up to 47 times tonnage. So not just an order of magnitude, but 1.5 orders of magnitude change in tonnage. And that's just come from evaluating the rare earths of an old lead mine. Very supportive community. Bottom right, you can see management of the local mine museum who afforded us a lot of historic information, which we use in the models. And if we can go to the next, before the next slide, sorry, the Jokikangas prospect in central northern Finland, adjacent to our admin office in Oulu. Jokikangas is basically a different style. I think it's going to be higher tonnage, lower grade, but very competitive with Corsness in terms of resource outcomes, and could be the dark horse really in terms of a Halleck Creek style major tonnage rare earth open pit concept in an industrial part of Finland where there's already vanadium mining in the past. We go to the next slide. Thank you. The key thing is here, it's a bit of a busy slide, but if you just focus initially on the red lines on the map on the left, there's those are the resource outlines or zones as they're cut underneath the gravel, the 8 meters of gravel roughly that hides most of these, all of these zones, in fact, apart from at the mine. And again, that's why we're having such exploration success, is that the whole thing was covered. And hence the drilling that was done, this aggressive step out drilling in the past by Outokumpu looking for lead, but they kept finding rare earths. So we'll talk about that. That's the hard rock outcome, which is the main game. Then, of course, there's a tailing storage facility, which is up to 1 million tonnes, up to 6,500 ppm or 0.65% total rare earth oxides, 29% of that being NdPr, the underwritten elements we spoke about earlier. These have been, this exploration target, I hasten to add, that's not an inferred resource because we need more metallurgy to be published, which it will be soon on the tailing storage facility. It's a harder job, obviously, being crushed already, but in terms of processing, but obviously mining an easier job because you've got free dig close to surface. And the government are very interested in us progressing that because the concept of using old tailings dam and extracting rare earths is what attracted our REM hub funding in the first place. Lanthanide concentrate stockpile, that's the third tier, or third area, if you like, of resource / exploration target. That's adjacent to the mine because in the mid 60s right through the 70s, they knew they had rare earths in their feed. These are competent operators, Outokumpu, and so they experimented with extractions and did a very good job. And basically, we're following on from their work. But of course, they didn't sell the product because it was a low rare earth time in the early 70s, with cerium being used to colour TV sets, and that was about it. They weren't using high-powered magnets back then, or what we consider high-powered magnets. So the rare earth prices were depressed and they stockpiled the material. Luckily for us, that material, for example, the lanthanide concentrate, is at the moment being worked on in Sydney at ANSTO, and other facilities are working on the tailings in Oulu and the hard rock material in Outokumpu itself, the town. So the inferred resource outcome is a result of, this is our third resource statement in 3 years. We tend to update things as we go. This was a smaller update from before. We doubled the resource from 7 million tonnes to 13 million, or 0.8 or whatever it was, million tonnes back in I would say April last year. And February this year, we drilled a few more holes and added a few million more tonnes. So every time we drill this seam along strike, it keeps it growing. The grade's not changing much, which is pleasing. And then we also did something called passive seismic, which are these dotted black lines, if you look at the key in the diagram, that cover the entire tenement. And that has identified some significant anomalies that we drill tested in the case of the January drilling. And that's shown that those anomalies are likely to represent more stacked zones along strike in all probability. So therefore, we were able to justify the careful geometrical work of an exploration target, which we released a week ago or a couple of weeks ago, at 18 to 32 million tonnes, 0.8 to 1%. So overall, and that's exclusive, it excludes the inferred resource tonnages. So you're starting to see the overall, if you like, inventory of this project shining through. We have yet to include the areas to the south because we haven't done the passive seismic work on them yet, to Poikle, which we just picked up, which increases strike length another 2 kilometres on those 2 southernmost zones. And there's an exclusion you can see there around the Corsback area, which we're working on. Next slide, please, Anthony. So what we're effectively doing, this is a vertical cut through recent drilling, which we announced in February and resulted in a spike in our share price back then. We're effectively chasing gutters, if you like, in the host rock that have been gouged out by glaciers. The soft rock, which is the mineralised material, thankfully, was more amenable to being gouged out, so formed those gutters. So, and in fact, this work was guided, if you like, or assisted in concept by the previous work in the 60s by Outokumpu, finding gravity anomalies align perfectly with these ore zones. So it's not like some sort of PhD in difficulty. You just follow these geophysical zones along strike, and we'll continue to add tonnes as we drill these linear targets further south. And I like the simplicity of it. I like that it's preserved by 8 metres of gravel. So everyone's saying, how can you find these things at point blank? Why are they just sitting there? Well, the answer is they're not sitting there. They are covered. We can go to the next slide. So it's fine to increase resource and exploration target, as we've done, from 0 to what is arguably up to and including 47 million tonnes, and in my view would be double that in due course, up to 100 million tonnes. We just need to do the work. But what's not obvious is the metallurgical amenity, or getting the rare earths out of the carbonate material, or the carbonatite material. We've had nothing but success there, in my view. There's been no red flags, if you like, in PTGS services on the characterisation work, as well as GTK Mintech, which is the Finnish government, effectively. Oulu Mining School and working on the tailings dam has been their area of responsibility, and there's been some recovery progress there, as well as, importantly, ANSTO working on the separation ability of these elements within a concentrate, which luckily we had available already. So I think, look forward to, without going through this verbatim, but basically what you should see is continued news flow on that de-risking as we move towards scoping study work later in the year. And no red flags. There's obviously complexities, but they've been worked on in many cases in the past, and we're just capitalising on that good work, and improving it with our friends in Australia and Finland and Indonesia. Next slide. Thank you, Anthony. So in terms of next steps, it's clear, it may not be clear, but just to remind that there's a 2-pronged effort. One is drilling, resource expansion. Another is metallurgical work, which deserves its sort of primacy or place in front at the moment, because we want to convert some of these other areas to resource as well, and that only happens through metallurgical confidence. We are due to get some GTK Mintech flotation work, which have had our core samples for 12 months now. Mini pilot campaigns are being worked on at the moment at the beneficiation route, usually with these magnetic separators and things like that. So we're making some progress there, ably assisted by John and Mark Stemson, our metallurgical consultant. And we have to, if you like, show the entire flow sheet. So if you've got a flow sheet, you've got a project, and this is what's happened. In my view, we can't see any major difficulties apart from obvious increased complexity processing tailings, but the hard rock and the concentrate work's going very well. And that scoping study plan for 2026 is a real number. We go to the next slide, please. Every company, junior company, or as we are now, a nano company, should have, if you like, a competitive or sister project to support the other project. And Jockey Kangas, since 2023, has delivered very well for us. Particularly not just rare earth numbers, but high field strength element numbers, including hafnium, niobium, which were the cause of a share price spike in the company in April 2023. We look for more numbers from there. We've dispatched already. I was there in May where we logged a series of holes, completely unsampled in most cases for rare earths at the zone. It is more of a replacement zone, bigger tons, lower grade outcome, I would suggest. We don't know yet, but from the resource estimates, we surround some third-party resources, which we don't hold. Again, in discussions with the owner there, but there's definitely a case here for, if not replicating exactly the pathway of coarseness, then competing with it. It might even overtake if it starts to deliver on the grades. Next slide, please. So we do have projects that started the company, and shareholders in the past funded approximately 6,000 meters a year, which is not a lot of drilling on these epithermal targets, which is our kind of our technical wheelhouse in the past, if you like, since Mexico and Japan and things like that. We know what we're doing with this style of deposit. It definitely requires in planning, in depth, permitting, things like that. For example, we've got about 10,000 meters planned right now. We would like to see some permitting progress on the main asset, Hadrusha Humray. Culver's coming up, Pukanach, Nova Bonia. They're all with the government at the moment to be renewed. So we are awaiting an elongate process to renew those before we get back into investment. Meanwhile, this is an asset that has very low holding costs. Chekov-Zemplin, we're reevaluating the silver pre-resource there, if you like. It's not a resource yet, given current silver pricing. We drilled there last in February 2022. We can go to the next slide, please, Anthony. So news flow, as I've covered, is two-pronged in Finland of metallurgical progress and resource progress, which we've already announced largely, and I don't think that'll change again until we drill later in the year or we add some more exploration target confidence with more geophysics. Jockey Kangas, drill results shortly. Importantly, we didn't drill the hole yet again. We're benefiting like we did from coarseness, where about Australian $15 million worth of core is available for our review in the government library. And Jockey Kangas is the same. We estimate there's about $5 million worth of drill core sitting perfectly preserved in the Lopi or Rovaniemi facilities of GTK. And Slovakia, so look for news flow from drilling and metallurgy. Slovakia, we're going to wait until we get some regulatory approval there before it can compete with the Finnish projects. But some gold, copper targets ready to go. And we're refining those when time permits, but we can certainly maintain low holding costs there until we're ready. Go to the next slide, please. The value proposition implies low cost and high value outcomes. Obviously, the shares have declined recently, but we do see a recovery in value coming through with, as I said, the growth in confidence, which is the metallurgy side of things at coarseness. And then, of course, the initial growth in scale, of course, at Jockey Kangas. And as I said, we have an option on gold and silver in Slovakia. So easy jurisdictions to operate in fact, the easiest I've operated in, particularly Finland in the last 30 years in the business. And importantly, shareholders won't sort of regret investing in this jurisdiction. In terms of outcomes, look for, as I said, resource metallurgy and thick news flow, Not weekly, but every other week we should have some more news out. Thank you. Next slide. There's my contact details. Feel free to call or email at any time. I do answer the phone when it has an unknown number, and look forward to communicating with current and potential future investors. Thank you very much.
Thank you, Jason. Thanks again for that excellent presentation. Very good summary of where ERE is right now and what is ahead. So some exciting times for ERE. Now looking at your questions, and don't be shy. Please send your questions in for Jason. We're happy to answer any questions you may provide to us. If not today, then definitely we'll get back to you in future. Some questions now coming in. Just looking at the questions here. So first up, Jason, you talked about the resource growth at Coarseness. What's your view on that? How big could Coarseness become in the future?
Well, I mean, I don't want to break any rules, but the exploration target, and it is my job to speculate, it's just linear growth, really. And we keep doubling things at the current rate. If we drill again, I think we'll double it again to resource inferred to 30, and then we'll double the exploration target again. So I think exploration target plus inferred, I think we're pushing 100 million tonnes, this time next year. In an industrial part of Finland where the mink industry is struggling. So lots of support to get started, obviously in the highest grade areas, get that scoping study work done, but become a EU dominant high grade, hard rock resource. I guess I don't want to forget the point that logistically Finland's basically mainland EU. We're not off in Greenland or over in Brazil. This is right in the heartland of industrial EU. Back to you.
Excellent. Thanks, Jason. So everyone, you heard it here first. 100 million tonnes is what we're looking for in the future. So Jason's now raised the bar. So looking at Jockey Kangas now, Jason, question about Jockey Kangas. How do you see it compared to Coarseness? Could it become as big as Coarseness in the future? What's your view on Jockey Kangas?
Oh, they're different beasts. Chemically, one of them's more of an apatite or phosphate, which is Coarseness, easy to process. The research progress and industrial progress recently on processing silicate, which is allanite, which hosts most of the rare earths, not all, but most of the rare earths at Jockey Kangas, suggests slightly harder to process, but in a bulk tonnage scenario with longer life tanks and processing, you can do it at Jockey Kangas. It is similar to Halleck Creek, I think, in Wyoming. A replaced front, if you like, so you end up with mega tons, but necessarily you're at a different point in the grade tonnage curve, so lower grades. And I'm excited about the outcome there. You're in an industrial area which used to have a vanadium underground mine. So we look forward to progressing the asset. Fantastic place to work, low electricity. It's even lower price in northern Finland because of their decentralized electricity grid with nuclear and hydro everywhere. So yeah, I think look for, but the icing, I suppose I spoke about icing at Coarseness with deuterium and terbium, or dysprosium, I should say, and terbium. Here it's hafnium, the high field strength element at Jockey Kangas, so sweetens the economics.
Excellent. Thanks, Jason. That sounds exciting. So looking at Finland, question about your recent visit to Finland. You were back there, I recall, in April, May this year, just recently. How's it looking for the locals? Are they supportive? What's the community like? The government, etc. What's your feedback from Finland right now?
Well, certainly it's a first world democracy, free-thinking people. They definitely want, like any industry, they wonder about the community benefit. On the caution side of things, they worry about, and this is a subject of current debate, like Australia, I guess, with taxation, the amount of the tax take and royalties. So those things are subject to the normal healthy debate. I don't make a habit of talking politics as a foreigner, but they're certainly stable, whether it's centre left or centre right government, both pro mining. There's been no drastic change in any of that. The main concerns that the people have is the environment, which is fair enough, water and air, which I find wherever you work is a primal concern. And we've had community meetings, and that is the one note of caution brought up by the local people, albeit 100% supportive of the project. Pardon me, they worry about treatment of air and water. So we're very careful with that. We've been beneficiaries, have been involved with the kayak process, which is a local government initiative to sample water around the old mine as well as other industrial facilities in the region. So we support that, and our transparent reporting, because of the nature of being a public company, has been very helpful to us, actually. Like, anyone can look up our website. We have favourable press, and we mainly benefit from the fact that the local industry up until recently was mink and forestry, both industries sadly not doing very well. So they've welcomed us with open arms.
Excellent. Thanks, Jason. Now, the EU recently announced in May they plan to stockpile critical minerals, including rare earths. Jason, how are you seeing the level of support from EU for ERE?
Oh, look, the EU contributed the funds to the REM Hub consortia, which we're part of. We're the only supplier of actual rare earth material in the REM Hub consortia, administered by Click Innovation out of Helsinki. And that's been, albeit bureaucratic, but a successful process for us. Most of the grant processes we exclude ourselves from because they don't support exploration stage companies, which we still are considered to be, believe it or not, even though we're pushing towards indicated resource and metallurgically advanced. So we don't waste our time with a lot of them, including the recent ones, RAMP, etc., because they specifically exclude the exploration stage or the supply stage, which is baffling, but it's just the way it is. It's the same in Australia and Canada. People want to build processing plants, so for those processing plants. So we're in that debate, healthy debate with the EU folks all the time, but we don't waste too much time participating in processes when shareholders won't benefit.
Great, thanks, Jason. And looking at the market more broadly, question here about the rare earths market. Obviously, a lot of news about rare earths this past year with Donald Trump, China, etc. How are you seeing the market right now for rare earths and the outlook?
Well, the first time I worked in rare earths was 14 years ago at Mount Dorothy, and we had, in that case, a heavy rare earth prospect. The share price of the company I was working for at the time spiked because of a Chinese restriction on the Japanese industry. And I think that is going to recur, or it already has. And so it's not just the United States and Europe. I think about Japan a lot as well. And in terms of potential partnerships and people supporting the project, there's a longer and longer list, particularly as the credibility, if you like, credibility is a good word. People believe that the resource really is there with increased data. Fair enough. There's normal reservations at an early stage, but we can see potential EU investment, probable Japanese/United States investment in the asset for sure. We prefer the company. So look, there's definitely, albeit not much retail investor interest of late, there's a lot of federal government reaching out to us, but we're careful to preserve upside for shareholders and other stakeholders in Corsness as well. What we don't want to do is align ourselves to a concept where the asset is potentially parked, where that investor advances its other assets while it pumps the brakes on our assets. So we're very careful. I've had a long history of working with offtake agreements. They make for a great ASX release, but they may not accelerate your project.
Thanks, Jason. The question is coming about the business case. What's your cost of production for ERE? Can you give us some detail around the costs and, I guess, profit going forward, I guess, based on the current market and current outlook for rare earths?
Yeah, so normally underground production costs in this part of Finland, nominally, $40 a ton US, depending on your level in the underground mine. These are gross numbers, of course. We haven't included any processing, but you would suspect that the lower cut of production for us with these numbers, and given the $110 basket of NdPr, which is the cake, if you like, and we talk about the other elements being the icing, suggests that this is a highly profitable operation at a lower cut of 0.5% total rare earth oxide. Having said that, we're highly profitable. I think profitable is a better word, because obviously we have grade variation in these 6-7 zones that we have now. And I hasten to add, we're giving ourselves a lot of flexibility. With increased tonnages, you always have high grade zones within that. So it's better to have 100 million tonnes, or in our case, 15 million tonnes, with zones within that will make reserve from resource to reserve conversion. So look, I think there will be a hybrid of open cut, box cuts only, but mainly it is an underground mining solution, which is exactly what Corsness was in the past. And this again is a virtual circle. While we have good community licenses, we can confidently predict to the locals that the footprint you saw before is basically, we'll use that footprint and expand from that. So no large open pits in the case of Corsness.
Excellent. Thanks, Jason. Now, looking ahead for the rest of calendar 26 and 27, I guess for investors, Jason, what do you see as the key milestones for the rest of this year and next financial year?
Look, I think the scoping study work will be interesting later in the year, and that should be positive. Most of that so far, no red flags. Of course, there'll be more resource growth as we're covered, because it's linear. 6 zones are linear and completely open. However, it's always having growth in quantity. You want growth in quality as well, which is the metallurgical work, and we want to support that as well with shareholders' funds. So both prongs again, you'll see a lot of news flow. Potentially, you'll see some activity with respect to the gold, silver in Slovakia. That depends on its readiness and the government allowing us to get in there and do work. At the moment, we're just waiting for some permits. Potentially, you might see partnerships at asset level, as due to our balance sheet, there's only so much we can do. So we'll look for some beneficial, I think it's the best word, partnerships there, rather than just disposals. That's about it on that front.
Excellent. Thanks, Jason. Well, I think that's probably about enough time for right now for everyone's lunch breaks, etc. So thank you again, everyone, for coming online. Much appreciated to take up your time today. Thank you again for your time. Thanks, Jason. Please, as you can see on your screen there right now, please keep on our website for any updates. Please follow us on LinkedIn as well if you're on LinkedIn.
Thank you, Anthony, and thanks to the Fencing Advisory team.
Thanks, guys. Have a good day.